Hello, ladies and gentlemen. Good morning to you. It's the morning from this part of the world, and depending on whichever part of the world you're tuning in from, I wish you a good afternoon and good evening to you. Well, it's a new week. Happy New Week to everyone in the house. I do hope you all had a wonderful weekend and geared up for the new week's trading session. Well, it was a profitable week for us. I mean, during the previous week, as we did capitalize on various trading opportunities on the financial asset we were looking at. Last week, we looked at the US All Sports, the GBPUSD, and of course, the XAUUSD. And in fact, we were able to take advantage of the weaker US dollar, especially after the CPI data coming in um, below expectations, hereby increasing the speculation that the Federal Reserve may likely be cutting interest rates anytime soon. So as a result, we saw a weaker US dollar, and of course, on the GBP USD and the XAU USD, we were able to strategically position ourselves for those opportunities. And for those of us who stayed faithful with our analytical approach, well done and kudos to you. So it's a new week, and in this week's session, we are going to be looking at three financial assets. We are going to be repeating the asset we looked at last week, and let's see if we can replicate the success we had. So this week, we are also going to be looking at the US All Sports, the GBP USD, and of course the XAU USD. So for the next 45 minutes, 45, 50 minutes thereabout, depending on how long the session is, I am going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective with the utmost intent of identifying simple trading opportunities ahead of today's London and New York session. My own name is Sheriff Daramola, and I'm very much excited to have you around with us this morning. And for those of you who are joining us for the first time, who may be wondering what this is all about, well, first of all, I would like to appreciate you for being on board. I'm always excited to have newcomers in the house, and I do know you will be wondering what is it that we are doing here. Well, on the Forex Morning Mastery, we come together as technical traders, um, coming together to do follow-ups and reviews of our current positions in preparation of the London and New York session, and this usually happens 3 times in a week: Mondays, Wednesdays, and Fridays, of course. In as much as I would like to emphasize that this platform is not a signal service platform, but instead a platform where we all come together to have a deeper understanding into the behavioral patterns of market participants using basic tools such as the economic calendar, trend lines, key levels, and chart patterns to unravel the potential trajectory for price action. And depending on what kind of trader you are, be it day trading, scalping, swing trading, or positional trading, you can use the information you gather here to navigate the current market dynamics using your own um, approach. If you are a day trader, swing trader, what have you, to determine how you are going to be entering your trade. And it's important for you to also note that my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. So the more time you spend with us in this community, the better you will get in comprehending our analytical approach and eventually using the information gathered here to enhance your own trading decisions and strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. So with that being said, we will be diving right into the business, and as usual, the first thing we normally do every morning is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And of course, based on the asset we are looking at for this week, we will be focusing on high impactful event from both the United States and the United Kingdom economic docket. So our aim is to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, most importantly, timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, for today, Monday, May 20th, we do not have any high impactful event to look out for. Hence, I had to include the mid-tier economic features so that we can at least have a broader view into what majority in the market will be looking at today to guide their trading decisions. And after including the mid-tier economic features, what we have here are speeches from officials of both the Bank of England and of course the Federal Reserve from the United States. Now, looking at this, why is this important? Well, these speeches are very, very important for us technical traders, especially in an era where there is an uncertainty going on in the market. Now, remember, last week we saw the CPI data from the United States coming in below expectations, and of course, prior to this, the economy has been showing sign of sluggishness as the labor sector is not doing very well at this point, and of course the consumer sentiment index from 2 weeks ago also came in below expectations, giving us signs that consumers are not feeling confident in the US economy, and this is quite a red flag anyways. And of course, this has also incited the speculation that Federal Reserve is likely going to be cutting interest rate very soon, as their monetary policy tightening has had some tremendous effect on the economy. However, during Thursday and Friday's trading session, we had some recent hawkish comment from Federal Reserve official. I think Loretta had a speech on Thursday, and Wallace too also had a speech on Friday, where they did emphasize that they will be taking a wait and see approach. That means they would not be cutting interest rates soon, as they will still have to keep interest rate higher for an extended period of time, waiting to see subsequent data to further buttress that inflation is really thinning out in the economy. And of course, this has thrown a log in the wheel of market participant expectation. Now we are in an imbalance where we do not know what is really going to be happening. So the speeches coming up today is a window for us to actually have an insight into what the Federal Reserve officials are thinking behind the scenes to guide our trading decisions. And of course, their remarks today will be providing the market with insight into the bank's monetary policy stance, the economic outlook, and of course potential future policy actions. So as a result of this, we will be looking forward to this event. In about 28 minutes from now, we will be looking at broadband speech from the United Kingdom, and in about 3 hours from now, we'll be looking at speeches from Bostic, Barr, Waller, Jefferson, and Bostic, all from the United States, and they are all Federal Reserve officials. So we will be looking forward to see what they will be saying, and this obviously will be having some influence in the sentiment in the market, which obviously will reflect on the chart as price action. So we are going to be diving right into the charts in a moment with the utmost intent of sniffing out for patterns and structures on the chart that we can actually use to strategically position ourselves for this event today. So with that being said, here I see your comment, Simasiku. Good morning to you. Glad to have you around this morning. I'm very excited to have you, and I wish you also a blessed Monday, and thank you very much. So with that being said, here we will be diving right into the business for today, and of course the first asset we are going to be looking at this morning is going to be the USOILSPOT. And remember, last week we had an interesting situation on this asset where we did capitalize on both selling and buying opportunities. Remember, the first half of last week was more of selling the USOILSPOT, and not until the midweek when we got information from the EIA and API report, which emphasized that the US crude oil supply declined significantly, hereby giving us signs that the supply in the market is not enough to cater for the demand. So with our simple economics, the path of least resistance was looking bullish, and of course we did capitalize on that momentum during the second half of the week. Now, going into the new week, the question in everyone's mind right now is, will price action continue to find buy pressure to push price to new highs, or are we likely going to be seeing selling pressure, considering the fact that price action is at a crucial juncture in the market? So before we go into the technical details, that is to understand the behavioral patterns of market participants, in fact, it's important for us to have an insight into the fundamentals behind the scenes, which is likely going to be influencing the sentiment in the market, likely or have been influencing the sentiment in the market. And I have a couple of highlights here. I think I have about 4 of them, which I also want us to deliberate on. The first one on my list here, unfortunately, I will not be able to share my screen with you, as I did had the file was corrupted, but I'm here to resolve it. But I will read through and to give you an insight on what may likely influence the sentiment in the market. Now, this morning, from China, we were able to get the latest information as regards to the People's Bank of China maintaining the 1-year and 5-year loan prime rates at 3.45% and 3.95%. Now, if you have been part of this session, remember about a couple of months ago, is it a couple of months ago or later last year, we had this news that the Chinese government was trying to reduce interest rates so that they can attract investors into the economy. And I know you will be wondering how is this relevant to the price of oil? Now, we should remember that China is the second largest importer of crude oil in the world. And whatever happens to this economy will definitely influence the demand in the market. Now, if the economy is doing very well, and if there are positive signals from China's economy, oil traders feel much more comfortable that demand will continue to thrive. However, if the economy is not doing very well, chances are that decline will reduce, and this will affect the global demand, hence resulting in price dropping to the downside. So for me, this is a positive signal. Maintaining this rate at 3.45% is quite a good development, and of course it shows that the economy is willing to expand. Then besides this, we also have the China's industrial output, which was increased by 6.7% year on year for the month of April. This is a very, very good news, indicating robust manufacturing sector. Their robust manufacturing sector is recovering, and this significant measure announced by China stabilizes the property sector, including the 1 trillion yuan in additional funding and easing of mortgage funds. So for me, these are very, very good signals, and this might influence the sentiment in the market in favor of buying the USOILSPOT. Now, besides this is the Federal Reserve influence on the US oil. The crude oil prices may face selling pressure following hawkish remarks from the Federal Reserve official. Remember, the USOILSPOT is a US dollar denominated asset, and considering the fact that it is a US dollar denominated asset, chances are that if the dollar is doing very well, that is, the value of the dollar is rising, chances are that selling pressure will be exerted on crude oil. Now, how is that possible? Well, if the value of the US dollar continues to rise, then this commodity becomes very expensive for other currency assets to buy into this commodity. And what does this simply mean? It will affect the demand in the market, resulting into high supply, and of course price will definitely drop to the downside. And though, despite the fact that market participants are thinking that the Federal Reserve may likely consider interest rate cut anytime soon due to the sluggish economy in recent times, recent hawkish remarks from the Federal Reserve officials is stating otherwise, as they are willing to maintain interest rate higher for an extended period of time. And if this continues, and following the remarks from the Federal Reserve officials today, remember we are looking forward to the speeches of some of the Federal Reserve officials today. If it maintains an hawkish outlook, then we may likely see selling pressure emerge again on the US oil spot. Then besides this, we are also going to be looking forward to the US crude oil stockpile in the form of reports from the API and the EIA on Wednesdays and Thursdays respectively. So we will look, depending that happens, though that it's yet to happen yet, but when it happens, it will further give us an insight into the supply demand ratio during last week's trading session. So with the information we have here, let's look at how the market participants has digested the information and how they are going to use the information to navigate the current market dynamics. Now, for us to do this, we would like to have an holistic perspective into this market. In fact, my first point of contact for this week is on the 4 hours time frame. And right here on the 4 hours time frame, after taking into consideration the character of price action in the last 5 to 6 weeks, that's since the month of April, it is quite clear that the market has been bearish after testing that new high at the $87.50 area. And of course, we have seen consistent lower lows and lower highs. So if I give a visual representation here, you see price has been dropping significantly, and in fact we have a new setup gradually unfolding at this point in time. Now, despite the uniform and consistent lower highs, one thing I have come to observe here in the last couple of weeks, or let me say since the beginning of this month, is that price action is finding it difficult to find new lower lows, and this for me is a sign that buyers may likely be gaining momentum anytime soon. Now, zooming into this current structure here, you will see that as soon as price action tested that area between the $77.50 area and of course the $76.65 area at the beginning of this month, we've continued to see buy pressure resume from that particular area. And even during last week's trading session, the same thing also happened. Despite the strong bearish momentum, as soon as price got into that area, we saw another engulfing bullish candle springing out of that particular structure during the second half of last week. And in fact, this momentum here led to the break, a partial, let me put it that way, break out of this descending trend line. Now, as a result of this observation, I have a demand zone marked out between the $77.50 area and the $76.65 level. Now, if price remains above our demand zone, it is quite reasonable that we look out for patterns and structures that support the idea of buying, and we will not be considering selling unless this demand zone is broken to the downside, except for rare cases where we see significant selling pressure that can make us sell even above the demand zone. Now, in addition to this structure is our key level for this week, which is duly situated at that psychological area around the $80 mark. Now, look at how this $80 mark area had played a significant role in determining the direction of price action since the beginning of this month of May. Now, at the beginning of this month, we saw how price did break down the $80 psychological level, as you will see here. And since the breakdown happened at the beginning of the month, buyers have been finding it difficult to break out of this structure. If you look at this structure closely, you will see every attempt by buyers to break out has always been met with strong resistance from the sellers, pushing price to the downside. However, the recent rebound in price has actually gotten into that structure, and as soon as price got into this area again, we begin to see selling pressure resume from that particular area. So for me, and of course you know how we use our key levels in this community, as long as price remains below the key level, our chances are that we may see selling pressure, and the only condition that will make us buy is for price to break out of that key level. However, if we consider this descending trend line here, you will see that price action has already broken out of the structure. I think this happened on Friday. We had a breakout of the structure, and from a technical standpoint, when price breaks out of a trend line like this, we may likely see price come back to retest the structure, and if we see the emergence of buy pressure resume around this area, it will be a good opportunity for us to jump in a buy position. However, if price drops below the descending trend line and continued selling pressure persists below that structure, we might be seeing price action drop to the downside, welcoming selling opportunity in that regard. So you will agree with me that we are at a crucial juncture in this market where, depending on how price action or how market participants reacts to the zone during the early hours of this week, will determine what if we are going to be buying or selling this asset. So what I would like to do here is to hold on a second. So what I would like to do here is for us to scale down into our execution time frame, that is the 1 hour time frame, where we want to look at how market participants have been reacting to this particular area since the new week began, and in fact we will begin to see things more clearly. Now, scaling down into the 1 hour time frame, and after observing the character of price action in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 hours, you will see that the market has been going through a little bit of consolidation phase, giving us a range bound structure as price action is currently confined within the $79.80 level and the $79.20 area to emphasize the prevailing uncertainty in this particular market. I think I have a typographical error here, so let me quickly correct this. So we have our resistant line for the week situated at the $79.80 level, while the support line for this week is situated at the $79.20 area. So I encourage us all to mark out these levels, as they will be playing a major role in guiding our trading decisions for this week. Now, with the situation we have here, whenever we have a range bound structure, it's a clear sign that there is an indecision going on in the market, and we want to exercise patience and wait for the market to finally make a decision, which would reflect on the chart as either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line of that range to give us an opportunity to sell. So with the situation in mind, this is where our center of focus will be for today. So we will look out for either buying opportunities at the breakout of the $79.80 level. So placing a buy stop order above the structure makes quite a lot of sense, while a breakout of the $80 mark will finally give us a signal that buyers are getting stronger, as this will be the first time price action will be breaking back above the $80 mark since the beginning of this month. So if a $80 mark gets broken, I'll get more confidence to maximize the potential of this bullish move. However, if the continued attempt by buyers to break out of this zone fails again, and we see selling pressure persist one more time, well, a breakdown of the $79.20 level, which happens to be the support line, the initial support line for the week, will be welcoming selling opportunities, and in fact price will be below that descending trend line we identified on the higher time frame. But for me, and based on the way things are going at this point in time, and considering the crude oil stockpile, which was on the downside for last week, and of course the geopolitical tensions in the Middle East, and of course the Russian-Ukraine war, where we have seen persistent strikes between both countries in the last couple of days now. For me, I still think the path of least resistance for the US oil spot is looking bullish. So let's see how the market will play out. I already had a buy position triggered, though it's currently running in a loss, but I'm still looking forward to more momentum above the $79.80 level. But if it fails and price breaks down and retests the $79.20 level, that will be a good opportunity for us to sell. So this is my simple view on the US oil spot. I encourage us all to mark out these levels accordingly on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. And in fact, I'm also seeing an ascending trend line here, which could play a major role in guiding our trading decisions for today. So we have an ascending trend line here, and look at how beautifully it shares a confluence with that $79.20 level. So let's see how it will play out. This could take about 2-3 hours before we finally see a manifestation of where price wants to go, at least for the first half of this week. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. So I will be seeing you all on the other side of 10-15 seconds. And don't forget to support the channel. If you have found this content helpful and useful in making your independent trading decisions, kindly give the video a thumbs up. Your likes are valuable to me, and of course it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. And thank you very much as you do so. See you soon. All right. So I see your comment, Kwaku Anim. Good morning to you. Glad to have you around with us this morning. I see you, Soldier Pete. How are you doing today? And Richard Blackett, I also see you too. I love that spirit, and thank you very much for the compliment. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next asset on our watch list for today. Stay tuned in. So the next asset we are going to be looking at this morning is going to be the GBPUSD asset. It's the pound sterling against the US dollar, and in fact last week was one of our profitable weeks on the pound sterling, as we were able to capitalize on a 175 pips upward trajectory in the pound sterling. And of course, we saw how the pound sterling took advantage of the softer than expected CPI data from the United States, riding that momentum all the way into a new high, a monthly high at the 1.2700 area. And of course, since price action got into this zone last week, we have begun to see the inability of buyers to continue that momentum, and of course this has resulted into a range bound structure. Now before I go in further, I would like to emphasize that we will not be taking the higher time frame. I already shared a video on the GBPUSD during the course of the weekend where I did a top-down analysis on this particular asset. So if you missed out on that video, I encourage you to watch it so you can have a background knowledge of how we got to the point you are seeing on your screen right now. The link to the video can be found right in the description box of this current video you are watching. So with that being said, let's dive right back into the business. So we had our key level situated at the 1.26500 area. Remember, if you watch my video, and of course when price trades above this level, it shows that buyers are still strong in the market. And of course we also have an ascending trend line which we identified on the 4 hours time frame. And of course, you know how we use our ascending trend lines in this community. As long as price remains above them, we'll continue to look out for patterns and structures that support the idea of buying that particular asset, while the only condition that will make us sell is for that ascending trend line to be breached and broken to the downside. But as it is right now, price action is still maintaining trading activity above the trend line. And if we zoom into the current structure to look at what has been happening since the beginning of this week, you will see that trading activity has been oscillating around that high I talked about earlier, that is the 1.2700 area, giving us a range bound structure which appear to have transitioned into an uptrend continuation pattern. So if we take into consideration this impulsive move and of course this range bound structure, you will see that we have a what may look like a bullish rectangle pattern where the breakout of the resistant line of the pattern will be a confirmation to join an uptrend move. Now the question here is, will the uptrend situation start right now, or how are we going to see price drop below the support line into this ascending trend line, where the emergence of a reversal pattern will be the one that will now finally incite the uptrend move? Well, at this point in time, we have no other choice than to exercise patience, as we have a range bound structure which emphasize the prevailing uncertainty in this market. So with this situation we have right now, we have price confined within the 1.27120 level and the 1.26930 area for the last 12 hours thereabout. So you know how we use our range bound structure. We exercise patience and wait for price to either break out of the resistant line for buying opportunities, or the breakdown of the support line for selling opportunities. Now let's consider the potentials of the buyers first of all, since the trend is still looking very bullish at this point in time. So in that regard, I already have a buy stop order sitting above the 1.27120 area, though a breakout of that area will confirm a trend continuation pattern and of course incite an uptrend move to the upside. However, if price action drops below the 1.26930 area, I would like to see a retest of structure before jumping in. And the reason why I would like to see a retest is simply because price action is trading above the ascending trend line, and you know, when price is trading above the ascending trend line, we obviously want to be looking out for patterns and structures that support the idea of buying. We do not want to have anything doing with selling unless we have significant confirmations that portrays otherwise. Now in this situation here, for me to consider selling, I would like to see price breakdown, retest, and continue selling pressure below that structure to join a bearish move. Now if we join a bearish move, as soon as price action tests that ascending trend line, we are going to be moving our stop losses, secure the position, as we never can tell, buy pressure could resume respecting the ascending trend line one more time to incite an uptrend continuation. However, If price breaks down, retest it, then this will further confirm the selling pressure. We could add more position and of course look out to see how the market will be reacting to the key level at the 1.265. So these are the ideas we are looking at on the GBP USD today, but trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give you updates as at when due. So I encourage us all to mark out these levels. Very important. It's a simple trading setup that we are going to be using to guide our trading decisions for today. If you have any questions whatsoever as regards to my illustration, feel free to let me know in the comment section. So I will be taking the next 10-15 seconds as always. Let's see if we have any questions before we move on to the next asset on our watch list. And for those of you who had clicked on the like button, thank you very much for your support. I really do appreciate. And for those of you who are yet to click on the like button, please do. This is the cheapest way you can actually support this community to grow. And thank you very much as you do so. So see you all in the next 10-15 seconds from now while we wait to see if there are any questions. All right. So I see you, C40. Glad to have you around with us this morning. It's been a while since I saw you. Trust you are doing very well, C40. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, we can move on to the final asset on our watch list for today. Stay tuned in. So the final asset we are going to be looking at for this week, for today, sorry, it's my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And in fact, I took an advantage of that buy opportunity earlier today. Even I think a couple of hours into the market open, I had to capitalize on that uptrend because I had a strong feeling that the momentum might continue during the first couple of hours of the new week. So I joined at the breakout of the $2,416.50 level, And another thing that buttressed the idea of buying was the fact that price action was still trading above the ascending trend line we identified on the 4 hours time frame, and of course that key level had a $2,400 area. So as a result of this, I jumped in that position, and currently I'm having about 240 pips in profit at this point in time. And before I go in further, for those of you who might be wondering why I'm not starting from the higher time frame to give a top-down analysis, well, I already done that during the course of the weekend, and I shared this publicly on all my social media platform. So it's very important for you to look at it to have a background knowledge of how we were able to identify the structures you are seeing on the chart right now. The links are right in the description box of this current video, so you can go ahead and check on it after the live session. So with that being said, let's run through the market. So last week was one of the most successful weeks for us on the XAUUSD, as we did capitalize on both buying and selling opportunities, giving us over 1,000 pips in profit on this particular asset. Now, for the sake of clarity, let me share with you what the setup was looking like at the beginning of last week that led to that bullish traction we saw. So remember, this was what we had last week trading session. We had this structure identified on the 4 hours time frame, and it is characterized by two important features. The first one here is this descending trend line following this series of lower highs after price action tested the all-time high back then, had a 2,420 mark. And then we also had the key level for last week situated at the $2,360 area. And you know how we use our key levels in this community. When price remains below the key level, we look out for patterns and structures that support the idea of selling, and when price climbs above the key level, we look out for buying opportunities. So the first half of the week was more of selling, as we saw price action consolidation phase leading to the breakdown of the key level, and we were able to capitalize on this 270 pips move to the downside, as you will see here. And remember, we had multiple entries. So as soon as price action tested the 2,320 area, we begin to notice the inability of sellers to continue that momentum, and the appearance of buy pressure around this area was a good signal for us, and we were able to join that bullish momentum early enough as we rode it all the way to the upside, breaking out of the key level and the descending trend line to hit another level at the 2,420 as at the end of last week trading session. And for those of us who were part of this profitable journey last week, well done to you. So as we prepare for the new week, we want to see if the market is going to give us the same privilege of maximizing more opportunities in this market. And in fact, I also want to emphasize that the resurgence in buy pressure on the gold commodity could be attributed to the renewed expectation that the Federal Reserve may likely be cutting interest rate anytime soon, especially after that softer US CPI data that came in on Wednesday of last week's trading session. However, we should also take into consideration the recent hawkish comment from the Federal Reserve officials on Thursday and Friday of last week, where they still maintain the idea that interest rate will be kept higher for an extended period of time, waiting for significant data to confirm that truly inflation is thinning out. So we are in an imbalance right now. However, there are various factors behind the scenes which for me still making me believe that the path of least resistance for the XAUUSD is still to the upside. The Chinese government has continued to build on their gold reserve. They continue to add more. From the report we had for the month of April, they added another 60,000 troy ounce of gold to their gold reserve, and they've been doing this for the last 18 months. So for me, China's continuation in buying is another key driver to increase prices. Now, most of the Euro-Asian countries too are also doing the same. Not only China, India is doing the same, Kazakhstan, Russia, Turkey too as well. So most of these Euro-Asian countries are doing the same, and I still think that the path of least resistance is looking bullish despite the hawkish remarks from the Federal Reserve. Now, for today, based on what is going on, I think that market participants will keenly be looking forward to the speeches from the Federal Reserve officials. We have Bostic, we have Barr, we have Waller, Jefferson, and Mester coming up later today. We talked about this earlier. So their commentary could give valuable insight into the future direction of monetary policy. And in fact, if they maintain their cautious and hawkish narrative from last week, we may likely see a capping of this upward trajectory. Now, looking at things from a technical standpoint, this is what I was able to come up with on the 1 hour time frame. So the new week started with a strong bullish momentum as we saw price started at around the $2,416 area. It gave us a little bit of range bound structure as we had the initial resistant line at the $2,440.50 level, while the support line remains at the $2,416.50 area. Now, for those of us who saw my commentary this morning, I'm very sure you must be in a buy position right now, as I did marked out here that this $2,440.50 level will give us more buying opportunities, while a further breakout of the highest point for this week right now, which is the all-time high, the all-record high on the price of gold, which is at $2,450, will welcome more buy positions. So I will continue to look out for more buying opportunities at this particular point in time. Now, as we look out for buying opportunities here, I would not want to ignore the potentials that sellers can come in at any point in time. Now, please note that even selling pressure coming in here doesn't necessarily mean that we will be going all the way to the downside. Now, if you look at the structure closely, you will see that since last week Monday, price action had consistently and uniformly found higher highs in this market, and this has resulted in the appearance of this ascending trend line. And you know how we treat our ascending trend lines in this community. As long as price remains above them, we will continue to look out for patterns and structures that support the idea of buying. So if it so happens today that selling pressure persists around the $2,450 area, we could see a situation where price could retrace back into that trend line, and look at how beautiful that trend line shares a confluence with our key level at the $2,400 area. Now, if price comes into that area, I will now look to see what will happen around that area before considering selling. So if price comes into the structure and we see the emergence of a reversal pattern, it could come in the form of either a double bottom structure, inverse head and shoulder pattern, falling wedge, whichever case it may be. We mark out the neckline of that pattern and then buy the breakout retest of that neckline to join that uptrend move. So even if selling pressure comes in here, I will still be willing to exercise patience to see how far it will go. And if it comes into the trend line and our key level at the 2,400, we look to see how the market reacts to that structure. However, if price action breaks down this confluence, then this could incite selling pressure to the downside. Now, for those of us who are scalpers, those of us who are counter trend traders, if selling pressure persists below the 2,450 and we in any way see the emergence of a reversal pattern like a double top structure, well, a breakdown retest could incite a short-term selling opportunity, which for me could be considered to be the result of profit-taking activity following the recent surge has at the beginning of the week. So if we look at that, we are looking at that's quite huge. Come on, that's like 300 plus pips in that regard. So I would also want to be on standby to capitalize on that opportunity if any form of reversal setup forms around this area. So I will be giving us updates on both my TradingView and Telegram platform if any of such development happen. But in the meantime, we maintain a bullish bias. We have levels $2,416.50 level triggered. We have the 2,431 triggered, and of course recently we had the $2,440.50. So we look forward to see if the highest point for this week at the 2,450 will get broken to trigger another buy position. And for those of us who joined this bullish momentum early today, please ensure you move your stop losses. Let's secure some profit. Remember, price action is within an all-time record high. Our price is within an uncharted territory, and due to this we could see some development happen around this area. It could come in the form of choppy market conditions, as participants may not feel comfortable within this area, and it could spark some profit-taking activities, pushing price to the downside. So with this understanding in mind, if you already have a position, please move your stop losses, secure your position, as anything could happen anytime. So this is my simple view on the XAUUSD, and that reminds me, we will be running the XAUUSD live window later today. For those of us who do not know, the XAUUSD live window is a platform where we all come together to monitor real-time price action on the XAUUSD, and it usually starts about 5-10 minutes into the New York session, and it lasts for about 5 to 7 hours depending on the volume of trading activity for that day. So I look forward to seeing you guys on that platform. For those who don't know, the link will be revealed by the end of the program, by the end of the session. So as soon as the session ends, you will be seeing the link to the live XAUUSD live monitoring window. Click on that link, click on the notify me button so you can get notified as soon as we come on live. So this is my simple view on the XAUUSD. If you have any questions or you need some further clarifications, feel free to let me know in the comment section, and do not forget to give the video a thumbs up. Those who have done so, thank you very, very much. I really appreciate your support. And for those who are yet to, we have over 12 people on board. Please, let's make the number of likes tally with the number of people on board, and thank you very much as you do so. So let's see if we have any questions. So I will be taking the next 10-15 seconds off before we start rounding off on today's Forex Morning Mastery. All right. So in the absence of no questions, I want to say we have come to the end of today's Forex Morning Mastery. I see your comment C40. You are very much welcome and glad to have you around. So let's see how the week is going to play out for us. Let's see if we are going to be able to replicate the success we had last week. So today we were able to take on all the 3 financial assets on our watch list, which includes the USOILSPOT, the GBPUSD, and of course my favorite, the XAUUSD. And in fact, we were able to identify simple trading setups using our basic tools such as the trend line, key levels, and chart patterns to strategically position ourselves for the next move. And I do hope you marked out all the levels and structures we identified on the chart. If you had done so, well done and kudos to you. So all we do right now is exercise patience and wait for the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, let's ensure we have a well-defined risk management strategy in place. And for those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. Trust me, the more time you spend with us in this community, the better you get to comprehend our analytical approach and eventually use it to make independent trading decisions. So I look forward to seeing more of you same time on Wednesday, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing so far, and of course prepare for Wednesday's trading session, which promises to be an exciting one. Remember, we are looking forward to some high impactful event for that day, which could bring in some liquidity into the market, and of course volatility may set in, and we do want to be on standby to capitalize on that one. So you do not want to be missing out on our Wednesday session as well. So it's on this note, I would like to wish us all the best of luck today. It has been a wonderful moment with you guys. I really appreciate. I appreciate your support. Thank you very much from the bottom of my heart. And for those of you who are yet to click on the like button, please do. This is the cheapest way you can support this community to grow. So with that being said, do have a wonderful evening, everyone. Trade smart, trade consciously. Bye.